Hello, I welcome you back to my YouTube channel. In today's video, I wanted us to look at market orders explained. In other words, what are market orders? In this video, we're going to look at how you particularly place orders, probably on MT4, MT5 trading platforms, practically step by step. We'll again see the importance of orders. We'll see the various types and categories of orders in the very video. Please, if you do not know the above mentioned, please keep watching this video. By the end, I believe, or believe you me, you'll be in position to know what we have just mentioned, or the details about orders. Or before you leave this video, you will now be in position to know how to trade. In other words, how you execute orders, what are their importance, why do I need to execute an order, why do I have to do an execution order, not a pending order. My name is Sewankambo Isma. I do welcome you back to my YouTube channel. Thank you for liking, subscribing, commenting, and sharing our various social media platforms, liking and following. Well, like I've told you at the beginning of this video, we're going to look at the various types of orders, and we shall see how we place these orders, how we use these orders on our MT4 platform specifically. Of course, if you know how to place these orders, or if you learn from this very video on how to place orders on the MT4, then you probably will be in position to place these orders on MT5. First and foremost, what you should know is there are two types of orders. We have pending orders, and then we also have market execution orders. For those of you that don't know what orders are, when you buy, when you sell, you're doing or you're executing an order in the market, in other words. So you're ordering a blocker to buy the market and to sell the market. So that's why we actually call it a pending order. So, because you would be asking, why is it an order? Why is it a position? So at the moment, before you place it, it's an order. Or if you're in the process of placing this order, it is an order. After or finishing executing this order, that's when it comes to be a position. So literally, there is literally a very slight difference between an order and a position, like the way I've just explained. So when it comes to market execution order and pending orders, let's start with the market execution orders. Market execution orders, we're looking at a scenario whereby someone places an order at the current market price. For those of you that are probably familiar with our platform, the platform actually keeps moving along the platform. Now, this price, or that line that usually moves or that keeps changing, is what we call the current market price. So when you buy at that point, or when you sell at that point, you actually are doing what we call market execution. So the moment you enter at that particular price, you're actually doing market execution. Now, we're going to see the various ways of how you can do this, but usually this is referred to as an on-click, which is probably the easiest way of doing this. And then there is the other way where where you look at the new order, which we're actually going to look at. Then there are scenarios whereby you have analyzed your market very well. Like, for instance, if you have a strategy, and this strategy tells you that for you to execute an order, to buy or to sell, you have to see these three things in place. In other words, you should have A, you should have B, and then you should have C. Now, the moment you see A, B, C in place, then you need to execute an order. Now, there are scenarios whereby you have A, you have B, but then by the moment C will be in place, or C will occur rather, you will probably be traveling. Maybe you'll be boarding on the plane, and probably you may be in the meeting, probably you may be in the hospital or somewhere where you can't conveniently bring your laptop, bring out your laptop or your smartphone and execute this order. Now, under such circumstances, this is when we can actually deploy a pending order. Now, a pending order comes in, you have analyzed, you have A and B. But then by the moment C occurs, you know it, you have seen it, but then you will not be at the computer or your phone at the very moment. So what you literally do, you can buy, you can sell at that particular point before even market reaching at that point. So your job is to make sure that you literally know where C will take place. So if you know that point, then you can always put that order, and the moment market reaches at that point, it will execute an order whether you have the internet or no, whether your computer is on or off, whether battery is dead or still on. So provided, regardless of any situation, it's like you've already ordered a broker, like I've already told you. It's just an order to let someone probably to let someone, or to let you probably buy or have a position in the financial markets. Okay, so you've literally ordered the broker that the moment price clocks to this point or to this price, then please buy me. When it probably sell me. So that's the importance of pending order, which actually makes it clearer as to what I mentioned earlier at the beginning of this video, whereby I said it's mainly for professionals. So you literally, even though a profession is not going to be boarding, probably is not going for a meeting or doing anything, so they will have to make sure that they position themselves at that point, even before market reaching that point, even though they will probably C finds them on the PC, they've already positioned, and probably literally they're doing something different. They're utilizing this time. They're utilizing this time, of course, for them to execute these orders. Now, when it comes to pending orders, we literally have four of them. That is the buy stop and the sell stop, buy limit and the sell limit. So it's your job to know which are these orders, okay? Which is which, in other words. Then secondly, which works when and why. So these are some of the things that we're going to see in this video. First and foremost, like I've told you, there are four orders. So you need to know that if it's a buy stop is actually placing an order above the current market price. So in case C tends to happen, that is for your strategy, for our strategy that we're looking at, ABC. So in case C tends to happen at a certain point, slightly above the current market price, so you need to know where's the current market price. So the moment it actually happens, or you're looking at it happening slightly above the current market price, then you'll have to, and probably you want to buy, then the order that you can execute is called a buy stop. So it's not now a buy like the normal buy as we saw with the market execution. So a buy stop is actually an order placed above the current market price. And then if probably you're not looking at buying, and this time around you're looking at selling, then it becomes a sell limit. So a sell limit is actually an order, or it's an order placed, or probably a sell order placed above the current market price, or it's actually selling above the current market price. So we see that it is literally very easy. However, to some, or to layman, or mainly to beginners, it is something hard for them probably to interpret here and there. This, I would probably say, it's something that involves some bit of cramming. So you need to cram, like I'll be showing you as we proceed on, or in the due process of this video. Now, if someone would ask now, what if I want to sell below the current market price, or I want to buy below the current market price? Now, if you want to do this, then we see the remaining orders probably taking this position, this place, which is the sell stop and, of course, the buy limit. So if I want to sell below the current market price, it becomes a sell stop. And then if you want to buy below the current market price, it becomes a buy limit. Usually, these four orders confuse people, but what I can say, they're usually the common orders that literally make sense even to any person that is, of course, buying above the current market price. Because when you say that I need to sell above the current market price, literally to a layman doesn't make sense. So I'd say let's have our main interest on a buy stop, because buying above the current market price is at least a bit okay and a bit fair, like it's normal, which isn't the case with the sell limit, where someone selling above the current market price, because someone would be like, now why don't you sell where it is? Because I think you'll be literally making more profits when you sell. After all, it's coming down more, down. You understand? So there is some bit of confusion, which I literally say you should only cram or understand. Cramming in quotes, I'm not saying that you should cram, but then it sometimes it makes a lot of sense. Okay, if you just get to know that literally a buy stop is a normal order, and then of course also a sell stop is the normal order. A sell stop is of course selling below the current market price. When you sell below the current market price, we assume the current price is still at a certain point, but then it's going down, which isn't, of course, when it comes to, which isn't something very clear, uh, uh, something very realistic, of course, when it comes to a sell limit, because rather a buy limit. Buy limit is buying below the current market price. So someone would just say, why don't you just buy now? So the main effective uh, orders here among the four are the two, that is the buy stop and the sell stop, and they are the most commonly ones. Believe you me, if you're there and you've been trading these orders, I believe, or you can now be my witnesses, probably that you can be my witness or witnesses that the buy stop and the sell stop are the most commonly used pending orders. We are orders, of course, if you were to compare them with the buy limit and the sell limit. So the last type of order that I will actually have to look at is the trailing stop. The trailing stop is an order. So there would be a couple of different orders, but I'm looking at mainly those effective orders that you have to know when you trade profitably and at that level of profitability. So the other order, or the last order that we're going to look at, is called a trailing stop. Trailing stop order. A trailing stop order can either be a buy or a market execution order, or a pending order that has already been executed. In other words, you're already in a position, a buy position or a sell position, but this position has to be in profit. If it's a buy position, the market has already executed this order and it's already in profit. If you had entered that market, this order must have probably gone higher, slightly above the current market price or above the current market price. If you're selling, then this market must have been probably executed. That's if it was a pending order, or if it was a sell order, it must have surpassed and went further below the entry order of your sell position, and in other words, made profits. So you already need to be in profits, and these orders that are in profits must have been allocated with a stop loss. So a stop loss is also another type of order, just like the way you hear stop loss. So it's an order executed with a buy or a sell that stops us to make big losses. In other words, it's the one that we put to stop us from making a loss. In other words, you've made your analysis, and we're looking at that scenario whereby if the market has decided totally not to go to your position, there is always that section, that price, where you think the moment this price is probably reached, then my order or the market will now cease to go in that direction you had anticipated intellectual-wise. So my point is, these orders must have been allocated with a stop loss. Now, if you allocate them with a stop loss, and they're in profits, so what we do, we literally move the stop loss from the negative side slightly before the current market price, that point where the market is in profits. So meaning that you actually drag the stop loss from the negative side to slightly the positive side. But then what you have to make sure is you don't need to exceed the current market price. So if, let's say, your target is to be $100, and the market so far, probably, let's say you're buying and your target is to profit, should be $100 and the market has reached, let's say, $60. So if you drag your stop loss from the negative side and uh, and the current market price is at $60, you can probably bring the stop loss maybe up to $50 or $40. Means that your stop loss now, even though the market closes with a stop loss, it will be like you've actually secured already the 50 or the $40, probably the profit side where you have actually put your stop loss. So this stop loss is a stop loss, but then this time around, it's not a negative stop loss. It's actually a positive loss. So you've made a loss which is positive and you're still in a position. So you've secured already some profits and then you're still in a position, just like the way in my local language we say nyamantono okayaneli munkwawa, meaning that that small piece of meat, you actually fight for more as you have already the small piece in your armpits as you keep fighting. So you've put some profits already, but you're in position. So which makes it clear that a trailing stop is actually an act of trailing or moving or dragging the stop loss from the negative side to the positive side to secure some profits as you keep in a position. I think these are some of the most effective common orders, and I believe I have explained them at that point where literally any person can understand them. If you haven't, please go below this video, check for our contacts, reach us. We'll be in position to help you furthermore in issues concerning learning how to trade, setting up accounts, signals, and a lot more relating, of course, associated with forex trading and other tradable instruments as well. So at the very moment, allow me take you to our PC, to our platform. We see how we can probably execute some of these orders, and we can practical as well learn how to do this on our behalf. In other words, in our rooms, in our bedrooms, in our offices, wherever you are, such that you are in position to do this yourself, because after all I've explained this to you, you may find it hard to do it practically if you do not, or if we do not go to that section where we need to look at the practical side of it. So let's get ready and see how we practically do these orders. Remember, note everything such that you do not miss out each and every step. Yes, we are on our chart. This is our chart, and apparently the pair that we're looking at is Euro USD. Now, like I've promised you, we're going to see various types of orders, how they are placed, the easiest probably, and also the hardest way. But in this video, mainly I'll be providing the easiest way of how you can probably execute these orders, such that you also enjoy as you're executing these orders, and probably also enjoying this video as well. Like, share, and subscribe. Well, as we reach onto this on this chart, I'm going to start with market execution orders. For those of you that were with us at the beginning of this video, we talked about the current market price. For those of us that literally don't know what the current market price is actually this order, this price that keeps on moving, this line that you see. Let me try maximize it. This line that you see that keeps moving, it's the current market market price. So we call it the current market price. And if we want to buy, if we want to sell at this particular point, this is when we air out something called market execution. So to do any market execution, in other words, if it's your first time to do trading, to hear about trading, this is going to be your first trade in life, or in actually trading. Now, it's just a matter of this. It's you just need to come and click. If you probably expect this market to go up, that is if you have the strategy and this strategy tells you that the market is going up, then you just need to come and buy. Now, hold. So like I was telling you, if you expect this market to go up, okay, and here is our current market price. So what you literally have to do is actually for you to come here and you see this thing, it's called an on click. Okay, we have a sell and then we also have a buy. So if you expect the market to go up, this is when you click onto the buy. But before you click onto the buy, you have to be aware of the volume that you're using. For those of you that this one is always calculated for, like for instance, if you're looking at risking $10 or $50 or $100 for the particular trade that you're going in for, you need to calculate. In other words, you have to use an appropriate lot size with the amount of money that you want to risk on that particular trade, with regards also to where you want to place your stop loss. Okay, so there is a video that I released about risk management, money management, that concerns how you calculate this lot size, the formula that you're supposed to use to get the appropriate lot size that is probably effective for you and efficient for the currency pair that you're going to be using. So when we come out from there, so it's your job to, you have to make sure that this is there. Okay, so just if you want to buy, rather if you expect this market to go up, as I wrap this off, if you expect this market to go up, so your job is to make sure that you just come and you click buy. You see, but before I click buy, this line is actually bold. In other words, it's not dotted. But then when I click on to buy, we're going to see our order coming there. So this is our buy order. It will tell you that you have a buy here with this lot size, and usually it comes with a unique number, or which we call a unique ID. So this is how we buy. In other words, to buy, it's just a matter of you clicking buy. And also the same happens if you expect this market to come down, you just also need to sell. So trading is very easy. It's just a click of a button, just like the way you've seen. And what we have just done now is just what is referred to as trading. Now, what comes after we click the button is what is difficult, okay? But otherwise, to trade, it's very easy. It's just a click of a button. Now, like you've just seen, that's how we buy. And the same way, the same procedure is the same for a buy, rather for a sell. Usually a sell, we call it a short, and the buy, we call it a long. So the same procedure. Now, if you want to give this order stop loss, you just, after putting it there, then you can, of course, double click on it. Okay, there is the other way, whereby we need whereby you need to first plan. Usually this is not the professional way of doing it, because we always need to first plan, and planning involves knowing your entry and demarcate it, knowing where to put your stop loss, demarcate it, knowing where to put your take profit and demarcate it. Then after demarcating those parameters, like for instance, let me show you that. Usually we use this horizontal line. Let's assume I'm having a take profit at that point. I put that line there, and then this was my entry. Then I say I want to put my stop loss here. So this is my entry, this is my stop loss, this is my take profit. Let's say we have demarcated already before probably entering this trade, and then after that you enter the trade like the same way we did. After entering the market the same way we did, you double click on the order. When you double click, it actually, this is when it brings the different parameters. Like you can see, it brings the stop loss, brings the take profit, and then of course after putting on all those, like for instance, when it comes to our stop loss is 1.00021. So if I try to put in 1.00021, and then I also put my take profit as 1.00213, then I click on to modify, then automatically these orders will definitely be there. So when I remove our lines, you can now see that this stop loss is actually there, and I'm risking 7.8 US dollars. That is about 7.8 pips. Okay, the details are always there the moment you point at this particular order. Then when it comes to the take profit order, like I've already told you, it's the point where you definitely expect that, the moment market reaches at this very point, I'm taking my profits. That's why it's called a take profit. So that's the point where you think you'll be taking your profits. And this point, when I point at it, and it will show me that I was risking, probably our stop loss was -7 and my take profit is 11.4 US dollars. That's 11.4 pips as per to what we see. So this is the same way you do on the of course the buy. It's the same way that you do on the sell. However, when it comes onto the sell, it is different, because for the sell, let me first a bit reduce onto the size. In other words, let me reduce onto the size. Yeah, that is too much. So like I was telling you, when it comes to the stop loss, for the stop loss, usually, let's say, I'm assuming that if this was the current market price, usually what happens is this. If this is the current market price and you're selling means that you're probably expecting the markets to come down. So if the markets are coming down, it means that your take profit now is going to be somewhere down, because now you'll be making profits when the markets are moving down, and then your stop loss will now be up. So that's the only difference. However, when we are executing it, you just need to make sure that my stop loss is slightly above, and where I'm putting the stop loss is the right point, the right area for me to put my stop loss. And the same with the take profit. That is, of course, also looking at so many factors. Factors such as probably risk reward ratio, the style that you are trading, and all that. All these have to be in return followed, such that before audio link executing these orders. So this makes it easier that at the very moment things to do with the market execution order, we know how to put these orders, and as we have seen in this video, how to buy, how to sell on this particular point. Now, usually some people, the most difficulty most of the people get is actually planning. But when it comes to planning, knowing where to put the stop loss and the take profit, this is something to do with your trading strategy. In other words, all this has to be stipulated in your trading plan. So it's your trading plan that defines where to put your stop loss, where to put your take profit. Why are you putting the stop loss there? Why are you putting the take profit there? And why are you specifically trading that pair? And the other challenging thing here is also when it comes to the on click, is usually most people tell me, Isma, most of these guys, what they tell me, Isma, me, I'm not seeing this on my chart, which I'm sampling. Okay, they're telling me, Isma, I'm not seeing this on my chart. Now, this is what happens. If you don't see this on your chart, let me first wrap this circle that I've just put. If you dare get to your chart and you don't see this chart now, it either could be the pair that you chose, maybe, because it depends. When you're trading here and you're creating a trading account, you literally have to choose a trading type. Okay, it can either be an ECN, it can be a standard, it can be a cents account, depending on how this broker, the types of account a particular broker that you're using has. Okay, so you need to be sure that, yes, I'm using this account. Now, when some people are using certain accounts, they tend to, when they get to some pair, they are not probably in line trading them. Like, for instance, let's say a Muslim account. You've chosen a Muslim account. There are instruments that you're not supposed to trade. Like, for instance, instruments such as probably Bitcoin. I'm not sure, but there are certain instruments that chart, or a pair that own to that chart. Now, you can put it there, but then you will not be in position to see this thing moving. In other words, you can't execute an order in that particular pair. Now, if that's not the case, then the other case is this thing must be hidden. It could be hidden. Like, you see this thing, this where I'm pointing, this draw down arrow. Okay. You just need to click onto it, or you can also decide for it to disappear. So if it's not there, you can remove it. Or if you want also to hide it, you can decide to hide it. Though you have to be sure that you don't click in the parameters of sell buy. Okay. So, and lastly, there could be other reason as to why you can't see it. It could be because your trading platform is not that linked properly, or it's not linked totally at all to your brokerage sites, okay, or to your brokerage account. So if it's not linked, then it means that it's not there. Or it could be there isn't internet, and probably those are the could be would be alternatives or reasons as to why, options as to why this on click is not showing. Now we have seen how we can execute our orders, that is the market execution. Now let's come to and see how we can execute pending orders. Okay, let me just get a fresh chart. Let me just go to my market watch. I choose Aussie USD. Okay, Aussie USD. Now when it comes to Australian dollar, US dollar, okay, technically, hold, technically, I see a major support there, okay, and it's most probably this support is going to be broken and come down as we probably, maybe it's going to bounce off. I thought that this we're still on Euro USD. Now, when it comes to onto these trades, the first thing that you need to first know, let me first make it, okay, let me make it a bit bigger such that we can ideally view it clearly. Okay, so if this is my chart, okay, and yes, let's assume if this is my chart, the first thing that you need to know is to spot to know where the current market price is. Let's assume, I'm assuming that this Australian dollar is going to break this major support here, and as it breaks this, that's what I actually looked at as at ABC. You know, we assume that this market is going to break this point, okay, and as it breaks this point, it will reach here. So there are two scenarios. You can either wait for it to come, as it reaches here, you execute, but then this means that you need to be onto the chart. You actually need to stick onto the chart. If you're to do something, then you need to be always keep checking monitor and see, you know, has it, you know, reached or not here, this and this, here and there. You understand? So to overcome the stressful, you know, lifestyle, you know, and also being stuck onto only trading, and you see onto the charts here and there, because some of us have other businesses that we do. Probably you have other businesses, maybe you're employed. It's not a full-time thing for you. Even though it's a full-time thing for you, it shouldn't be stressing. It should basically be freedom. Now then you can, I'm showing you the easiest way of placing pending orders. Now you can just come and probably plan it. You can plan and be like, yes, I'll put an order here, and of course, since I want to sell below the current market price, now what I'm probably expecting would be this market coming and, you know, comes down here. So since I'm expecting this, it means that I'll be selling, and selling below the current market price is called a sell stop. So since it's going to be a sell stop, what I'm going to do, I'm also going to define where my stop loss is going to be, because it's a sell still, even though it's a pending order. So since it's a sell stop, then I'll put my take profit there. Let me demarcate it for you such that we do not forget that this is a sell stop. So this order here in the middle is our sell stop, and probably this is going to be our stop loss, and then this will be our take profit, abbreviated as TP. Now we have planned, and now this is when you bring in an aspect of calculating the lot size here and there. However, we have done this already. So when you reach here, after putting here, knowing the type of order that you're going in for, you just need to come to of course, new order. Okay, let me circle it such that you do not ask Ismail where is the new order and all that. So new order. So this one that I've just, you know, circled. So you come to new order, you click onto new order. So when you click onto new order, let me make it somewhere clear here. where you can see it properly. So first, you need to define the lot size that you're going to use. Let's assume you've calculated and then the lot size that you've gotten is 0.1. And then when you reach there, the next thing is to come onto the type of order that you're going to enter. So it's not a market execution, rather it's a pending order. So since it's a pending order, you click onto the pending order. After clicking onto the pending order, you need to define, be specific. Which type of order is it? Is it a buy stop, buy limit, sell stop, a sell limit? So you need to click onto this drawdown. When you click onto this drawdown, this is where we find our sell stop, because I've already also showed to you here that we are putting a sell stop. So you click onto the sell stop, and this sell stop is going to be here at 0.666930, and that's the point we are going to put our pending order. Then the stop loss that we're going to put is going to be 0.67284, and then also the take profit, which is 0.66287. Then after, you need to confirm, not just putting and then you go. You need to first confirm and see, yes, I've confirmed it's the order, and then after you place your order. So when you place your order, the other thing that you shouldn't forget should be that since it's a sell stop, it still remains a sell order. Since it remains a sell order, therefore this order So as you can see, our orders have entered. This is our stop loss. When I try to actually remove the lines, you will definitely be in position to see that our stop loss is there and our sell order opening sell stop. Just like you also see, it's actually always denoted as a sell stop, and then the TP, all of them having the same ID, okay, unique ID. Like for instance, this is #810515994. So this order still will also have to appear below here, and it will not be among those that are probably executed. Okay, for it will be there: Australian dollar, US dollar, lot size, the type of order that is entered, the date, and literally everything. Its details are always below, only below, and for it's not executed. So it only becomes executed that's after this current market price comes, and of course the moment it reaches here, whether you have internet or no, whether your laptop is on or off, whether you're in the country or out of the country, this order of yours is going to be executed. So that's how we place a sell stop order, and that's how we place our pending order. So the same way you actually execute a buy stop, but this case for the buy, rather a buy limit. But for this case, let me first delete this order. For this case, for the buy limit, you need also to plan, and usually if it's a buy limit, you're buying below the current market price. Let's assume you want to buy this market. So by this buy limit, you literally be expecting, like I told you, buy limit usually don't make a lot of sense. They literally don't make sense if someone explains them to you. Like for instance, now it will mean that you expect this market to come, and then when probably when it's somewhere like this, it will now go up. So literally, these are rare occasions. That's why it's rare to have a buy limit, okay, unless otherwise. So we assume if this is your entry, you give it a stop loss somewhere, and you also give it a take profit as well up. So what you do, you come to still new order. When you click onto new order, you select here the pending order, you say buy limit. After selecting the buy limit, you put in your entry, put in the stop loss, take profit, and then you place your order. The same happens for the buy stop as well. Okay, the same happens for the buy stop. For the buy stop, it means probably, let me first remove these lines. For the buy stop, it will mean that this is, of course, makes sense to everyone. You mean that you expect the market to come up, though it hasn't reached that point. Usually we call it a confirmation point. So by the time it reaches a certain level, then probably it would have confirmed that this is now a right entry. Like for instance, if you expect it to reach here, and you expect this probably to keep moving upwards, okay? So what you usually have to do is to put that order there, as the current market price is still down here. So what you do, you put that order there, and then you determine your entry to be here. You can give it a stop loss, and semi stop loss is going to be there, and then you put a take profit, and your semi take profit is going to be there. So this is a flexible platform, a platform that I've not seen from anywhere. I've worked with a couple of platforms, but this is one of the flexible, convenient, uh, with light platform to use. So you follow the same procedure, new order, then you select it. Since it's a pending order, you select under pending orders, then you say buy stop. You put a point where this order you want it to be, the stop loss and the take profit, and then you place your order. So it is as simple as that. So placing pending order becomes very, very easy, okay, as you have seen. Okay, so it's a matter of you having your ABC, which is a trading strategy, which is very clear, which we have as well also had a provision for in this channel of ours, where you can definitely go learn and apply these strategies, like if you get an opportunity to see some of these strategies in our channel. So lastly, let's look at the trailing stop. Now, with the trailing stop, one thing that you need to know is that trade first needs to be on the profit side. Like for instance, we have a trade here, which is Euro USD, and it has made $6. So let me drag it and put it there. So it had, of course, gone up and probably reached our parameters. Let me maximize and show you that particular order. So this is our order, where you see a buy. I'd already entered this order. Now I assume this order of mine had a stop loss. So this is its stop loss, okay? Let me give it a stop loss, and also let me give it a take profit. So this is the order, okay? Let me put a line on that order. Okay, let me just put a line on that line, that order, such that you can easily see it. So that is the order which I've demarcated with a red line. So this is my stop loss, and then this is my take profit. And we have seen this order has actually went up, and it's already made some profits up to here. So what I'm going to do, I'm going to move this stop loss of mine, okay? I'll move this stop loss of mine from the negative side and put it somewhere, but probably somewhere like here, because it should not surpass. When you try to put it slightly above the current market price, it will not, okay? So I'm going to move it from the negative side to the positive side, such that I can secure some profits. You see, it's already in profits of $7.42 as it's still moving and actively. So I'm going to come to my I'm going to come to my stop loss, which is this. I move it. This is what I call dragging, and put it at that point. So when I put it, it ceases now to be here. Let me show you. Now, when I rub here, this order of hours is not there. And when I click on this order of hours, it means like we are still in this position. We have not closed this position, but we are securing a certain amount of money. Okay, so we have secured $4.7. This is sure deal. Okay, the trade is profit $7.1, but then I'm secured $4.7, but then I'm still in a position. So this means that if, as it continues going up, as it can continue be going up, as I also, when it goes up, I can also drag this up. As it goes up, that's why actually some books, they call it a lock, because now you can lock this to this, and as this keeps going up, you also go up to infinity probably. Okay, so meaning that you are in position to make a lot of profits. So that's why in some books it's called a lock. So as the market keeps going in our favor, the same happens for a sell. And For a sell, it will be the opposite. So it will be keeping going in your direction downwards as you also remove the stop loss upwards coming downwards. So I think you find this interesting, and probably I believe you have learned. If it has been um your first video, probably your first time to watch how to trade, I believe by now you have gotten the knowledge of how you can execute your first trade, and why you're executing this trade reason could be because the market is going up or down. If you have liked this, please share it to your friends, family, such that they also learn how to do this, and they also benefit. And also, if you have also still learned, you shall subscribe if you haven't. In case of anything that you don't understand, comment in the comment section, and probably also check out for signals on the still below social media platforms of ours, where we share signals, information, updates, fundamentals here and there, and all that, such that you at least benefit from the little knowledge that we provide or that we have, for you to benefit at a low or free of charge. So, for those that want to learn, the contacts are below this video. Hope you've learned. So in this video, just to have a recap before we can probably call it a day, we have looked at the buy stop, we have looked at the sell stop, we have looked at the sell limit, we have looked at the buy limit, we have looked at the buy itself, the sell itself, the trailing stop, the stop loss, and the take profit. I believe you have learned something. Don't learn everything. Learn something small, and this will perfect it, learn it, uh, understand it critically, go do more research, other than get to learn everything. Thank you so much. Stay Sewankambo Isma. I've also I've made a Luganda version for those that enjoy Luganda. Just go look for Luganda Forex Trading channel. Okay, I've created it. Go subscribe on it. Learn this in the Luganda version. I still say one Kambo Isma. Bye bye. Love you all. Thank you.